So this is going to be a nice little tip or trick to get better entries, to get better confirmation other than the normal confirmation we look for, such as, a candlestick formation, such as a chart pattern, such as a lower high, higher low. This tip with the candlestick formation, it's very simple. It actually gives us better risk, lower risk, and higher reward. So when you do see this form, your risk is very, very minimal, and I like this. There's some times where a stock will be rallying up into a supply zone, and I won't even short it just because I don't see this type of formation form. So it's very simple. We have a 4-hour supply here. Same thing from last video. We have a drop, a base drop, 4-hour supply. I'm going to turn pre-market back on because we're trading intraday. I'm going to go to a smaller time frame, such as a 5-minute, and we have the same 4-hour chart, 4-hour supply zone right here. Now, we hit it in pre-market, but like I said, I don't pay attention to pre-market. We could, come into here, reject the pre-market. This is still a valid zone because price never traded in there at the cash open. This never traded in there when the market was open. So I look for it when the market is open and the regular trading hours are occurring. So it's very simple. If we're talking about supply, I want to find a rally, a base, and a drop in the supply zone. So you have retail, which is buying, 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 buying. We come into the supply imbalance, and then look what happens. We're basing out. We have a nice basing out candle here. This formed a supply zone inside a 4-hour supply zone, a larger time frame supply zone. This also happened at the start of a zone. Trades that form at the start of a zone and form structure like this will have high chances of working out. Now, this is only for when zones come into when a stock comes into a supply imbalance or a demand imbalance, and it starts and it happens at the beginning of a zone. Rally, a base, a drop. I would have taken this short at this candle right here, put my stop loss above the high, and my take profit in this demand zone, right here, it's 5-minute demand. You want to look for rally, bases, drops inside or at the beginning of a supply zone, no matter what time frame you're looking at, because obviously we just formed a new supply zone at the start of an older 4-hour larger supply zone. So this was a good trade because we have supply at supply, and it gives us that double confirmation that I always stress and I always look for. So you could have took this short, somewhere in this area right here, and put your stop loss above this high. You're risking really, 70 cents, 80 cents at most for a move down, which lasted $2. So that's very good risk to reward. Let's look at another example. We have Boeing. This is now demand. So we had a used 4-hour demand zone. Equities, I'm going to turn my pre-market data off. We had a rally, a base, followed by another rally. This red basing candle is my start of the demand zone. I draw it to the lower portion of the wick. In this case, I moved it to the lower portion of the wick of that day, just because there was some selling activity down here. So we extended it. It's a used zone because price bounced at it right here. But fast forward to 2 days ago when this occurred, I'll go to a intraday chart, turn on equities, and this is what I mean for when we need to look for structure forming inside a supply or demand zone. Structure, I mean either a drop, base, rally, as if we're talking about demand, or rally, base, drop, if we're talking about supply. So here we had a drop. Look at this hammer candle. Look at this lower wick. Buyers were stepping in here in demand, followed by the next move, which was a rally. So we dropped, based, rallied. You could have taken this long above 125, above this high, put your stop loss below this low, and you would have had a nice move all the way up here. And then look what happened up here. We formed the supply zone, formed the 5-minute rally, base, drop. So this could have been a good trade if you knew to follow structure. And then also look, we started it at the beginning of the zone. Trades that start and form structure at the beginning or start of a supply or demand zone will have the highest probability of them working out. So that is the type of structure I look for. I look for this drop, base, rally. And if we're talking about supply, I look for this rally, base, drop. So here's another example of this type of structure we look for, but on a larger time frame. We're trading a larger time frame zone, and what happens is if sometimes the zone is too large, and like the last video I was explaining this, price enters the zone pretty deep, and when the price enters the zone deep, we might not provide a good bounce or rejection like we would at the start of a zone. So those unfilled orders might be a little deeper, and we have to wait for structure to form, but it's not going to form until a little deeper in the zone, and it doesn't happen at the start of the zone like we've been seeing. So right here we have a 4-hour demand zone. I'm just going to name this 4-hour. I'm going to draw a rectangle in this 4-hour demand zone. We had a rally. We based at this candle. This basing candle is what interests me, and then we rallied up. So I'm going to extend this, and now what happens is this zone worked out, but it didn't work at the start of the zone. So like I said, when demand or supply zones do not work out at the start of the zone, I look for structure on higher type of time frames. So now I'll go into a 1-hour time frame, and you guys are going to see the same structure we look for in this 4-hour zone. So we dropped, we based right here, and we rallied. So this is a valid demand zone. You can take this long once you see this form, and once you see this candle come above this, either the high, above the body, depending on your risk tolerance. It's all about spotting this forming real time. If you were to watch this while the stock was forming in real time, you would have seen, something like this. You would have seen this basing candle happen, and then if you were to see this candle before it closed, it would have started looking, good to the upside. You could have took this long above the high. As soon as we broke out of the demand zone, there's really no right answer to it, but you could have taken this long as you've seen a drop base rally form in real time. And you could have got a good 3 points out of that from this 4-hour zone. It didn't happen at the start of the zone, but we found structure inside of a supply zone, inside of a demand zone, so you could have taken that long there. So let's look at Netflix on 4/29, which was today. We had a 2-hour demand zone. So we had this zone right here. Now, also, that example I just showed you on Apple, we breached the demand zone. Let me actually go back to that really fast. So we breached the demand zone. We have a nice lower wick right here below the demand zone. But if you look at it, I really wouldn't count it because price didn't trade below that level for too long. It might have been one quick order that got executed at that price. So yeah, we broke below the zone, but it just did not trade down there, did not hold value down there. Sellers were not interested to bring the price lower. Hence why we have buyers stepping in with this big wick. But going back to Netflix, we had a 2-hour demand zone form today. So I'm gonna write 2-hour, and the same case goes with this. We breached the bottom of it, but we never really traded below that zone, never really held value below that zone, and it was just for a brief moment. So we have a 2-hour demand zone right here. This is the type of structure I'm looking for. Let's go on a 5-minute chart. We breached the zone, right? Dropped, we based. Look at this huge wick. If the wick alone doesn't tell you buyers are interested down there, then this rally candle right here should tell you, give you double confirmation. I took this long personally today, over high a day, made a red to green move, over $400. I took this long, and then I sold it like the 406 area, 407. So I didn't get this whole move up, but I was happy with profits, and you can't go wrong taking profits to the upside after a nice, solid, impulsive move to the upside. But if you were to notice this 2-hour zone, we did breach the bottom, did not trade down here. We have a lower wick, we have a drop, base, rally, double confirmation, could have taken this long, and this is the type of structure I look for. Drop, base, rally in demand, and rally, base, drop in supply. So I know I'm repetitive with this, but I just want to get this in your heads. It's going to come natural. So if I am repetitive, it's good because you guys need to start seeing this form in real time. And then, like I said, also in real time, it's going to look a little different. So you have to be able to spot these things. You have to be focused, and you have to be able to catch them forming real time because you'll have an edge and you'll have an advantage versus waiting for that candle to close.